Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, March 13th, 2016. Friday was another really strong day, and it's just a little strange the way they did this. It seemed like it was coordinated pretty well, and it started with the overseas markets. And really the reason why I'm saying it was coordinated really well is we had the huge sell-off. We had the gap up on Thursday, then everything sold off, and then we closed the day neutral. The reason for a 32-point rally the next day, in my eyes, they caught a lot of shorts, is pretty much what it was. And, that's pretty much it. But the overall, say, pattern or dynamics really haven't changed. So we're at the moving average right here. We have this trend line right here, and we also have this resistance. So we are in a resistance zone, and we also have some bearish divergence that are setting up. So does it mean that we have to head down right now? It would make sense to take a break, but what we do know is that when the bulls are in control, they usually like to just run the markets straight up and not take any breaths like this. And then when everything, when the buying is exhausted, then we get the big moves down. But we're in one of these just straight up no real break moves. But the reason why I'm sticking with, I think the long side is still very dangerous, even though the length of this rally has definitely taken me by surprise. You can see that we have 1, 2, 3, 4, 5. So we have 5 waves up. We have bearish divergences on the daily chart, but we're not really at the extreme overbought levels. So it tells me we could kind of chop around a little bit and then head up, or if the bulls are going to continue what they're doing, they're just going to continue up, and then this is going to get into the overbought levels. But like I said, we're in some really, really heavy resistance area. We have a excuse me, the gap at 2042. Can they go straight there? It's tough to doubt what the bulls can do when they are in control. But like I said, there's a lot of indicators as well as the breadth charts that are saying that we are really overdue for some type of pullback, and I'll show you that in the breadth charts. But anyway, we're at some resistance right now on the daily charts. We do have some bearish divergences in place, but we're not in the extreme overbought levels, so that leaves the door open that they can try and push things higher. Now the 60-minute chart, we had these divergences that were really, really extended, and then we had this big move here, but we never really reset the, let's say the momentum bar here. We never got into the complete oversold levels. We really are holding above the, the 50 line here. So there's no, there's been no breather for this move up that started all the way back in on February 12th, and you can just see by the momentum indicator staying above the 50 line here, and we still have these bearish divergences that I don't believe this reset the pattern from them. There's usually a deeper drop that will take place, but here you can see again where this is the resistance area. We have the gap that's right here, so there's a chance they're going to try that. And really, it's I'm still looking at this as an ABC, but we have 5 waves in it, and you can see that I'd mentioned that they like to backtest the wedge line. I thought this was it on Thursday, especially when they drop back down again, but obviously, Friday's move changed all that, and we may be trying to backtest the wedge someplace up in this level here. But again, bearish divergences, this is never reset. This move did not do it yet. So it would leave, let's say, it would suggest that there is some type of deeper or pullback that's going to be pending. And what would make sense is down to the 1961 or even the 1930 area. So 15-minute chart, you can see we do have bearish divergences here. This is really the last 5 minutes of the day when they started pushing things higher. So you can see we have the bearish divergences in set, extremely overbought. And if they're going to pull back, we have just the 23% retracements at 1973 and 1942 are normal, like let's say retracement areas before they would if they're going to try for another move higher. But like I said, there's reasons to believe that we're at the tail end of this move higher. And like I said, I'll show you in the breadth chart. So just from the move that we made from Thursday to Friday, you can see 2010 is a 23% retracement. That's also falling on this support right in this area here. So this is the first thing that the bears need to do, push it through this support. And then, we can keep an eye on the 2002 or the 1996, which is also a moving average here. But you can see bearish divergences were set all day on Friday, even, as they were pushing the prices higher. So let's take a look at some of the breadth charts and why I believe that we could be, at the tail end of the move higher. Now, this is just your advanced decline line. You can see where we are. We're actually at some of the highest levels we've ever seen. But whenever we got into these levels here, it's usually caused some type of pullback. So we're yet to get that yet, and it would suggest that soon. It's very exhausted right now, and we are going to get some kind of pullback. So if the bulls are going to continue to push it higher, the pullback will be something like this, and then they'll just push it back up again, and we'll get a move like this. Next one is this is a ratio chart. So it's the advanced decline put call ratio. You can see we're at levels again where typically we've had some type of pullbacks. So this is suggesting that that we could be at the tail end of the move as well. And you can see it started moving down, and when we did that, that's usually been when we started to see some type of pullback in the market. So put call ratio here, you can see there's just a ton of calls that are being bought right now. Every time we've been down at these levels here, we have seen some type of pullback, and you can see that we've already crossed up, and that's usually letting you know that people are taking kind of it would be like a buying protection, probably is the best way to put it. And finally, this is the bullish percent. And again, we're at levels right now that every time we've been here, we have seen some type of pullback in the S&P. So the tape is strong. There is no doubting that right now or questioning it. But what we do know is we have some bearish divergences in place on all the charts. We are in the resistance area, and we know most of the breadth charts right now are, suggesting that we could get some kind of pullback. So, let's see what plays out on Monday. This is frustrating. I'm not going to sit there and say, this is fun watching. I didn't really see this type of move coming. But they, they trapped a lot of people on Thursday, and then, Thursday they started shorting, and then Friday they just ramped the markets higher. So again, let's see what plays out next week. If they are going to take some type of breather, I would believe it would start probably as soon as next week, and we'll just keep an eye on where support levels are and go from there. So enjoy the rest of your weekend, and I will talk to you guys tomorrow.